You're a day trader or looking to get into the business. Is $4,000 a day scalping enough? Would that make you happy? Now, whilst you're about to watch me during a live trading session making just over $4,000, the truth is almost every professional trader I have worked with had virtually no interest in how much they made a day. They were interested in building consistency because they knew that if they could do that, the money would come. Now, that is a philosophy I took to heart when I worked on some of the biggest trading floors in the world, and it is probably a big reason I've been able to develop into a successful institutional trader. However, I would urge you not to think about the amount of money being made, but to focus more on the tools and approach being used, as that is ultimately what will bring the consistency you need to be successful. Let's go. Okay, so let's get on with it. Plenty to cover today. First thing you'll notice, market is selling off, right? Quite aggressively. But we should sell, right? Absolutely not. Okay, first thing, see everyone doing this. As soon as they see the market selling off, oh, let's look for the next pullback and sell, okay? That really isn't what I would suggest you do if you want to become a professional trader, because that is not what professional traders are doing. First thing they'll be asking themselves is the current move justified? Okay, so yes, of course we're seeing selling, and of course I can see that, because it's blindingly obvious, right? It's in front of me. However, too many people just see the market selling off and then assume let's sell. So first thing I'm going to do, take a pause. You're seeing me trade the live market on my live account. So you'll see all of this, execution, real money, all of that stuff. But before we do that, let's actually break this down. Like I said, is it justified? The sell-off, right? Justified? I would argue no. Why? It's not something you'll glaringly obvious on the chart. So sometimes you do need to take a step back. I say it all the time, but it is true. Obviously, I learned this being in a professional environment for many years. I saw the best of the best. They would take a breather, take a step back, not get too excited by what's going on in front of them, and actually ask themselves, what's been going on recently? So obviously, if we think about the most recent big release, inflation obviously is in focus at the moment. 0.4% month on month release just on Thursday. I believe that was 7.7 year on year, 7.7%. Okay, any other year that would be a disaster, right? The market would get absolutely crushed. In fact, what was the reaction, right? So we need to ask ourselves this. Reaction was the complete opposite. The market had one of the biggest days, so it closed there. Don't worry, it's market profile. You may or may not be familiar with this, but very straightforward, just a different representation of price. Just makes it easier and cleaner to be able to see what's been happening recently. That's the close. We opened there the next day and we ended up closing there. 200-point rally, one of the biggest days since 2020. Absolutely huge day. Okay, so firstly, we need to be aware the market is actually reacting positively. Why? Because it's not really concerned about the number itself. Like I said, 7.7% on any normal year would be a complete disaster. But we've got to think relatively in the direction, right? Because before it was 8.2%. So it's actually dropped to 7.7. If you watch my last video, the Fed has been, the market and the Fed have been talking about a above 5% peak in rates. Market's been pricing in 5.25. Now the market's pricing in 4.75 with a 50% chance of a 50 basis point hike in December. Previously, it was below 50% and actually quite a high percentage chance of a 75 basis point hike. Okay, I think 80% chance of a 75 basis point hike. So we've dropped, right? So we've dropped. The market is now expecting the Fed not to have to be so aggressive. So a huge relief rally. So I see the market selling off. I see that as an opportunity to do the opposite of what everyone's doing today, right? Because we actually look at what's been going on. The market's been going up, right? This is the sell-off we're seeing right now. It's come back to an area where obviously there's going to be a lot of buying interest, right? So I'm going to take advantage of all this selling. So the more selling I see, let's let it play out, the better. Okay, so I want it to be aggressive. I want people to get excited and carried away. and actually see them get trapped, right? Trapped selling. So we can see that here, very aggressive selling happening, potentially an area where if we go above, there's going to be people in a lot of trouble. There's actually something I'm going to talk a lot more about. I don't talk about it a lot, is a lot of what's going on down here. Actually really straightforward, okay? It's just the delta, the difference between selling and buying. I said I want to see a lot of selling. That means I want to see kind of the difference between selling and buying to be high. So you can start to see it actually here, okay, because the market moved on. Minus 889. Okay, and look at the positive delta. You can see it's like 10. It's nothing, basically. It's virtually zero. Can you see it there? Minus 889 versus 0. So this selling that's coming here, you can see it here. Massively negative, okay? So if we can get above this area here, I'm going to want to get into this marketplace, aren't I? Because I'm obviously looking for it to cover. And you can see their first execution, okay? A lot of buying coming in. If I'm wrong, I've taken a small position, I'll get out easily. If I'm right and we start to really go above here, I know I have a lot of sort of protection below me on my trade. So I'm really going to start to build aggressively above there, right? And we will talk about this a lot more going forward, the actual deltas that you see down here. So as you could see here, very negative delta, barely any max delta. Here again, look, minus 548. All that is, it's the selling versus the buying, okay? And you can see it here, big sell numbers, small buy numbers, okay? So this selling here, this selling, you can see it throughout, really. Lot of, and the market's moving a lot, so obviously forgive me for, it's not static, like I said, I'm showing you the market as I was trading it. So unfortunately, it is moving. So the numbers keep moving across, but you get the point, okay? So like I said, we've got this kind of sensitive area here where we've seen a lot of aggressive selling come into. As soon as we can get above here, what's going to happen? These sellers are going to bail, right? They're going to bail. Okay, so you can see me have one position there. I've now built another position. So I'm slowly building up these positions, right? So there's one more thing I wanted to talk about. So we talked about obviously the backdrop, the sentiment at the moment. If you think about it, when you've had such a big day on, it's justified because you've obviously had I'm hesitant to say softer CPI, but softer than before, relatively speaking. The market's now not going to just collapse the next day, right? Obviously, if it starts to build above the previous day, this is where we are right now. If it pulls back, of course, it's going to try its best to have a continuation. So kind of makes sense to be buying it. There's another factor that was at play today. Correlation against the dollar has been very, very strong. So I'm just going to forward this a little bit. You can see the market start to play out. And I am starting to take some of my position off. But whilst this is playing out, I just want to show you something else before we wrap up. And that is the yen correlation. Okay, so dollar has been selling off and equities have been rallying. Massive negative correlation for 3-4 days now, and below minus 80%. Huge correlation. Okay, so what we've actually seen today on this same day is that kind of relationship continue, right? So when I was buying this market, which you see here, can you see dollar yen? Okay, so you see all the markets are related. Very, very important to be looking at this. As the market was selling off, it was putting a lot of upwards pressure on equities. Okay, so you can see, so it's making, very simple, lower lows, right? You can see throughout the day, lower highs, lower lows, right? Lower highs, lower lows, etc. Basically moving down, okay? And you can see the relationship was very, very strong for several days. You can see that here with the correlations. Very straightforward for anyone to do any of this, okay? It doesn't cost you anything. You need to be aware of what's generally relationships are holding in the market and also the backdrop. Like I said, the sentiment is very positive right now. And that also allowed me to give me some confidence to not only scale out of my trade, but then add back in, right? So what I should have said is it's given me the confidence to get back into the trade after scaling, right? So you can see I've taken positions off near the highs or the previous leg. The market's now coming back, and I see that as an opportunity to get back into the trade. Okay, so I did want to talk a little bit about absorption, but you see there was some absorption going on, right? And that means where we've seen selling in the market not actually being pushed down. The slight problem is right now in this marketplace, I'm just going to forward it slightly, okay, because you're going to see some absorbing taking place. Let me just forward this here. Problem is it's happening over multiple prices. So it is quite tricky to see, and you can see the number of contracts on the bid, even in a big market like the S&P equities, is quite light at the moment because it's so spread out over so many prices. You saw yesterday or the day before this, 200-point move in the marketplace. That's 800 ticks. That's a lot of prices for volume to spread over. So the market is difficult to read on the depth of market right now. So easy enough for algorithms, we can see it, but difficult for us to actually see it on things like the depth of market. So if you watch closely, you'll actually see the market here print quite a bit of volume, but not go down. Okay, but it's over multiple prices. So unless you're quite experienced, it is quite difficult to see. So I am sticking more to things like the footprint and some other tools that I'm using, but I got back into the marketplace and I'm going to fast forward it here just so you can see. See how quickly it just shot up, and then it did take a little bit of time just to play out. Okay, so I'm going to fast forward it very quickly just so you can see kind of where the day ended up, and I think almost done, and there you go, took the last position off. About an hour and a half later, just let it play out for gain of $4,275 on this day. Okay. So that was a glimpse into how professional traders at the very top of their game inside institutions trade. Now, if you noticed at the start of the analysis, I talked about market expectations of recent rate rises impacting markets heavily, which, as you saw, played a crucial part in my trade. I've actually done the hard work for you and investigated this topic in much more detail in this video here. So that is definitely the video to watch next if you're serious about your trading.